I will go straight to my report of the Public Accounts Committee on the Ministry of Transport and Infrastructure Development appropriation account and fund accounts for the year ended December 31st, 2022. I will go straight to the methodology. The committee received written submissions and oral evidence from officials from the Ministry of Transport and Infrastructure Development, led by the Permanent Secretary, Engineer J.P. Makumbe. The information gathered enabled the committee to produce this comprehensive report. Committee findings. The first on committee findings is the expenditure figures. The Auditor General observed that appropriation account disclosed an expenditure amounting to ZiG 165 million, while the expenditure processed in the public financial management system was 165,453,000. These two figures were different from the sub-paymaster general account expenditure of ZiG 158,483,872 dollars. The ministry attributed the variance to bank charges incurred during the clearance of receipts and disbursements for 2022. However, a reconciliation statement was later produced as required by statutory obligations and submitted for audit to the Auditor General on the 11th of July 2023. After further engagements with the Audit Office, the Auditor General confirmed that the bank reconciliations were conducted properly and that the figures were aligned. The committee observations. The bank charges stemmed from the ministry's lack of monthly reconciliations. There was laxity in the Ministry of Transport's control systems and gaps in the supervision of bank reconciliations. The committee is recommending that the ministry must ensure that reconciliations are completed in a timely manner, and the staff responsible for supervision must verify that reconciliations are conducted on a monthly basis. 4.2 Submission of financial statements. The ministry submitted its financial statements on the 31st of March 2023, which was 2 months after the statutory deadline of January 30, 2023. The ministry acknowledged the delay in submission of the appropriation accounts, attributing it to circumstances beyond their control, particularly the late provision of direct payments documentation. In response, the ministry indicated that it was conducting monthly reconciliations and preparing write-ups for Treasury to resolve any issues arising from direct payments that lack budget support or proper documentation. On the committee observations, the late submissions of accounts by the ministry was due to the late submissions of relevant documents by the Treasury in relation to direct payments. And the committee is recommending that going forward, the Treasury must always provide direct payment documentations in time to enable the ministry to prepare its financial statements on time. 4.4, the annual report. The audit observed that the ministry submitted its annual performance report for 2022. However, the Auditor General was not availed with the source documents to verify the achievements of targets reported in the report under construction and maintenance projects that were budgeted for under the 2022 financial year. The ministry acknowledged the late submission. However, the ministry submitted that the 2022 annual performance report to the Office of the Auditor General was done in 2023. To address the submission of annual reports, the ministry has enhanced the management and consolidation of source documents, thereby improving annual plan implementation through strengthened monitoring and evaluation systems that addresses prior deficiencies noted in 2022 related to inadequacies of source documents. Additionally, the ministry reports quarterly on the achievements of its 100-day cycle projects to the Office of the President and Cabinet, and currently has no outstanding reports. The committee observed that the relevant source documents were later sent to the Auditor General, and the issue has since been resolved. Interest paid to contractors. The audit revealed that the ministry failed to adhere to agreed payment terms for interim payment certificates, leading to interest charges of 3,535,094 paid to contractors within the review year. The committee was informed that the ministry's payment to contractors had been delayed due to the Treasury's late fund disbursement. In addition, the ministry indicated that the management of contracts involved multiple stakeholders, necessitating actions beyond the Ministry of Transport and Infrastructure Development. To ensure payments are made in time, the ministry actively maintains communication with the Treasury and Zinara to secure timely fund disbursement for prompt payments. The committee observed that the late payments to contractors will increase the contract price, resulting in wastage of financial resources. The committee is recommending that in future, the ministry should explore negotiating with contractors to waive late payment fines, ensuring that a reasonable time frame is established in accordance with section 62, subsection 3, subsection 5 of the general conditions of contract. In future, the ministry should ensure that contractors are paid within stipulated time to avoid loss of resources through penalties. Furthermore, the Ministry of Finance, Economic Development and Investment Promotion must confirm funding availability before project commencement in all future programs. 4.6 Service level agreements. Audit noted that there was no evidence of a service level agreement between the ministry and 1010 Technology for the design, development, supply, implementation, integration, and maintenance of the Zimbabwe Integrated Transport System. The ministry officials informed the committee that the Zimbabwe Integrated Transport Management Systems is an enterprise system encompassing subsystems for the Vehicle Inspection Department, VID, Road Motor Transport, Central Vehicle Registry, and Inland Water Control. The system's design was complete and implementation was underway in parallel with the development of the service level agreement. The committee observed that without a service level agreement, the monitoring of the performance of the contract may be difficult. The committee is recommending that in future, the ministry must always ensure that service level agreements are in place before initiating any contract. 4.7 Construction and maintenance projects. The committee noted that the audit observation that in the 2022 financial year, Mashonaland East Province faced challenges in 81 construction and maintenance projects, with 10 uninitiated due to financial constraints and staffing shortfall. Contractor performance was inadequate, with only 27% of the projects completing on time, leading to the contract cancellation. Matabeleland South Province reported no completions, resulting in 9 contracts which lapsed and non-performing agreements which were terminated. Linash Enterprises received payment without contract formalization, raising legal implications. Delays in 7 road constructions and 3 maintenance projects were questioned. In response, the ministry informed the committee that in 2017, a survey highlighted adverse effects of severe weather and increased traffic on Zimbabwe road infrastructure, leading to the government to declare a state of disaster on February 24. In response, the Minister of Transport and Infrastructure Development designated the Department of Roads to oversee urgent repairs, particularly following the cyclone Idai. While initial funding was promised, delays in payments hindered project progress. The committee further established that although the ministry assumed responsibility for the project completion, it did not take over budgetary obligations from Treasury. Consequently, the Department of Roads faced challenges in funding, prompting an extension of Emergency Road Rehabilitation Program 2 under the statutory instrument 151 of 2024. Rural and urban areas of Zimbabwe road network infrastructure network to address ongoing infrastructural issues. The committee observed that failure to complete projects could lead to increased costs. Then the quality of service delivery might also be at risk if the ministry persists in working with underperforming companies without the proper due diligence. The amount of 193,000.
Order, Honorable Hwende. Honorable members, can we please lower our voices or take our conversations outside? We want to listen to this report. Please. And on the registers there, please, can you take one person at a time? Don't crowd people there. You may proceed.
Thank you very much, Honorable Speaker. The amount of US dollars 193,781 paid to Linash Enterprise may not be recovered due to the absence of a contract. On the recommendations, the ministry must always ensure a due diligence is done on the financial capacity of the contractors. For future projects, the ministry should consider selecting fewer projects which can be completed within the stipulated timeframes in order to save on resources. The ministry must investigate the circumstances under which Linash Enterprises was paid 193,781 without a contract and report to Parliament by 31st December 2025. Issuance of construction materials to contractors. The Auditor General observed that on December 3, 2021, the Mashonaland East Provincial Office issued 1,920 drums of emulsions, including 70.
Order, Honorable Tsvangirai. Honorable Tsvangirai, please go outside and finish whatever you're talking about. Then you come back when you're done. Please go outside and talk your issues outside. You may continue.
I think you must show your powers, Honorable Speaker, because I'm being interrupted.
In fact, Honorable Hwende, the next honorable member to make noise shall be the first unlucky one to be sent out by me. Can we keep quiet, or can we go outside and talk and then come back inside? Allow Honorable Hwende to present his reports in some quietness.
Thank you very much, Honorable Speaker. May God bless you.
Continue.
MC30, including 70 bitumen and MC30 to PESPI Private Limited for road maintenance on Seke Road, with intended cost recovery to be executed through deductions from interim payment certificate. By October 3, 2022, there was no evidence of recovery cost for these materials, and associated contract was pending renegotiation. Similarly, the Mashonaland Central Provincial Office advanced the road maintenance materials to contractors without proper documentation or approval from the head office. Furthermore, an audit in November 2022 revealed that serviceable vehicles and equipment at the Midlands Provincial Roads Engineers Yard were underutilized, as the provincial office resorted to hiring equipment from CMED, despite the availability of functional equipment. In response, the ministry highlighted that according to the general conditions of contract for construction works, the ministry was permitted to advance the contractors with materials or cash funding, with the deductions being made on monthly payments or interim payment certificates that become due. With regard to hiring of equipment, the ministry highlighted that it was always acquired equipment to supplement its existing fleet. Furthermore, the ministry indicated that it was carrying out an inventory to assess the fleet through CMED in view to have a phased approach towards the fleet resuscitation. The committee observed that the cost of construction materials advanced to the contractor may not be recovered, resulting in financial prejudice to the government of Zimbabwe. Serviceable vehicles and equipment at the Midlands Provincial Office's Engineers Yard were underutilized, resulting in unnecessary expenditure on hired equipment from CMED. Recommendations. The committee is recommending that by 30 October 2025, the ministry should ensure that the cost of the materials advanced to the contractor are recovered from the contractor to avoid financial prejudice to government. 3 months after tabling the report, the ministry must ensure that a proper audit on the use of drums is conducted and action should be taken against the directors who issued the 1,920 drums without following procedures. By 31st December 2025, the ministry should finalize and implement a phased approach to fleet resuscitation, ensuring that all government-owned equipment is functional and utilized efficiently, adhering to Treasury Instruction 101, which mandates the prevention of waste and misuse of government assets. I now move on to impounded vehicles. The audit observed that many impounded vehicles at vehicle inspection departments' depots have been held for extended periods, ranging from 1 to 12 years, while accumulating high storage costs that exceed their disposable value. Notably, Section 10 of the Road and Road Traffic Rules of the Road Regulations of 1974 allows for the sale of unclaimed vehicles after 6 months. Additionally, it was noted that 32 vehicles with RT16 forms were not listed in the CVR database, and 7 owners successfully obtained duplicate registration books by misrepresenting the loss of the originals. The committee was informed that the current management of RT16s related to vehicle prohibition was ineffective due to the lack of connectivity between VID's manual system and the CVR's automated one, allowing motorists to exploit the situation. The ministry was devising strategies to improve this process by capturing RT16s at various VID depots. Additionally, a vehicle inspection module was being developed in collaboration with partners at ZIMTIS to address these discrepancies. The integration of systems such as VID, CVRs, NARA, ZIMRA, VTS, and the civil registry was still under development. The vehicle inspection module intended to enhance communication between VID and CVR had not yet been initiated. The ministry explained that the NARA database contains vehicles that are not present in the CVR database, although the NARA can access some data from CVR. Reverse access was not available. Committee observed that vehicles may continue depreciating, resulting in very low auction price, hence failure to recoup storage charges. The lack of connectivity between VID manual system and the CVR automated systems allows motorists to exploit the situation. The committee is recommending that the ministry should, by 31st December 2025, implement a system to capture RT16s at various VID depots and integrate it with CVR automated systems. The ministry should expedite the integration of the systems between VID, CVRs, NARA, ZIMRA, VTS, and the Civil Registry to prevent discrepancies in vehicle registration by 31st December 2025. The ministry should ensure that Section 10 of the Road Traffic Regulations 1974 is enforced by ensuring that unclaimed vehicles are sold after 6 months, 3 months after the adoption of this report. Point of sale receipting and point of sale machines. The audit reviewed discrepancies between the total daily mastered receipts and amounts banked at the Bulawayo VID depot, indicating instances of under or over banking. The absence of field daily summary tallies from swipe machines impeded further reconciliation efforts. Additionally, the ministry failed to maintain an accurate inventory of all point of sale machines used in revenue collection. The ministry submitted that it had initiated investigations and made several observations regarding point of sale transactions. It was established that unsuccessful transactions occur when the swipe machine fails to produce a merchant copy, yet the client receives a confirmation message of success. In these cases, the ministry expects the bank to automatically reverse the transaction or the client to initiate a reversal, potentially leading to excess cash accumulation in the bank compared to the general receipts. However, the committee was informed that the inventory of all point of sale machines at the stations has been compiled, linking traced bank accounts to the ministry sub exchequer accounts. The committee observed that the ministry failed to maintain an accurate inventory of all point of sale machines used in revenue collection, which leaves room for corruption and abuse of the machines, where private machines may be introduced in the system, thereby resulting in revenue leakages at collection points. It was noted that point of sale machines are a security item which must be properly documented in the asset register. The committee is recommending that 3 months after the tabling of this report, the ministry must submit an updated inventory of all point of sale machines to the Auditor General. I now move to traveling and subsistence advances. Audit observed that the ministry advanced $10,788,853 as traveling and subsistence allowance to staff members during the year. However, the trips were never undertaken, and the funds had not been repaid to the Consolidated Revenue Fund by the time the audit concluded. In response, the ministry highlighted that the issue was the postponement of the trips, which were scheduled for November 2022, but were later undertaken in the first quarter of 2023. The committee was informed that to prevent this from happening again in future, the ministry implemented a recovery system for all advances made on trips that were not undertaken. The committee observed that there are weak internal controls which may result in misappropriation of public funds. The committee is recommending that the ministry should ensure that the newly established recovery system for advances made on trips not undertaken is effectively implemented to prevent similar instances, and that advances are only made for legitimate and confirmed trips within 3 months of tabling this report. Department, I now move to fund accounts. Department of Roads Fund Account 2019 and 2020 expenditure. The Auditor General observed that the total expenditure for the year, as disclosed in the financial statements, amounted to $195,157,75, whilst the public financial management system ledgers reflected a total of $171,999,000, resulting in a variance of $23,157,725. The variances consisted of expenditure that was processed outside the bank public financial management system. The ministry acknowledged that the variance was due to expenditures captured from both the PFMS and the physical ledgers, whereby the audits considered only the public finance management system. However, through the public finance management system and the reconciliations were done, and submitted to the Auditor General on the 11th of July 2023. Committee observations. There could be misstatements in the financial statement figures, and the committee is recommending that going forward, the accounting officer should always ensure that transactions are made through the public finance management system. I now move to the new Limpopo Bridge Fund account 2019 and 2020 income and expenditure. Audit observed that expenditure disclosed in the financial statement was $10,588,090, whilst the public financial management system reflected a total expenditure of $14,088,000. This resulted in an unexplained variance of $3,500,000. Therefore, audit could not rely on the figures disclosed in the financial statement. In response, the ministry indicated that the discrepancies arose from the fact that the public finance management system does not capture revaluation reserves, creditors' bank charges, and depreciation, whereas the accruals concept considers these items as well. Furthermore, the committee established that ledgers were prepared using the payment vouchers, and the bank statements was primarily used for reconciliation purposes to ensure that all expenditures were accurately captured. To ensure non-recurrence of the issue, the committee was informed that reconciliations were done monthly by an accountant, checked by the chief accountant, and subsequently approved by the Director of Finance and Administration. The fund account is now under the purview of Treasury through the promulgation of Treasury Circular Number 9 of 2020. The committee observed that no reconciliation on the variance was done by the ministry, and the committee is recommending that the ministry should reconcile the public financial management system and the figures disclosed in the financial statement so that the variance is traced and accounted for, and also enable detection of errors and omissions within 3 months of adoption of this report. Suspense account. The Auditor General observed that financial statements reflected a suspense account balance of 175,590. No satisfactory explanation or breakdown of the figures was provided for the audit. There was no effort made to clear the balance. The ministry submitted that the use of accounting policies or system has contributed to the rise of an imbalance of ZiG $231,794 between total assets and total liabilities, coupled with exchange rate differences that were experienced during the period under review. The committee learned that the new Limpopo Bridge Fund account was collecting different types of currencies, which included US dollar, rands, and ZiG. For reporting purposes, the fund reported in ZiG after converting both US dollar and rands currencies into ZiG, resulting in exchange rate differences that caused a rise in the imbalance figure. Additionally, the adoption of the accounting policies or system contributed to the rise of the suspense account, such as the implementation of the interbank exchange rate. The committee was informed that the suspense account was overtaken by events after Treasury had taken over all the retention fund accounts through the promulgation of Treasury Circular Number 9 of 2020. The ministry did not take further action. The committee observed that the ministry did not uphold Section 35, subsection 6, subsection A of the Public Finance Management Act, which mandates accounting officers to maintain proper record keeping and reconciliation. The ministry did not clear the suspense account despite the adoption of the new policies and the issuance of Treasury Circular Number 9, which demonstrates poor financial management. Committee is recommending that the ministry must conduct a reconciliation of the suspense account to determine the exact nature of the balance and establish clear financial documentation in line with the regulatory requirements within 3 months of adoption of this report. The ministry should submit a formal report addressing audit findings on the suspense account, including corrective measures undertaken to clear the suspense account. within 4 months of adoption of this report. I now move on to balances for cash and cash equivalents and creditors. The audit noted that the total cash and cash equivalents figure of 24 million and 76,000 as at December 31st, 2018 was not carried forward as opening balance as at 31st January 2019. Furthermore, the bilateral agreement between governments of Zimbabwe and South Africa stipulates that starting from September 1, 2015, the revenue will be shared equally between the parties after deducting 15% for operational costs. However, contrary to the stated arrangement, the management did not disclose US 298,310 and 55 million rands for 2020 and 2019. Then also US dollar 653, 254,000 and 38 million rands due to South Africa in their financial statements. The cash and cash equivalent as of 31st December 2019 were summed figures that included cash balances in US dollars, rands, and ZiG. Cash and cash equivalent at the beginning of January 29 were considered at the prevailing intermarket bank rate. Committee observations. The Ministry's financial reports lacks consistency and transparency, as evidenced by failure to carry forward the correct opening balances for cash and cash equivalents, and the exclusion of creditor movements. Additionally, the omission of revenue sharing obligation under the bilateral agreement with South Africa raises concerns about adherence to financial agreements and the accuracy of reported liabilities. The ministry lacks skilled personnel, as evidenced by the failure to carry forward the correct opening balance for cash and cash equivalents. Committee recommendations, Honorable Speaker, say. The ministry should conduct a financial reconciliation of cash and cash equivalent within 3 months of tabling of this report. The ministry should train staff to address the capacity gap in financial department by 31st December 2025. In conclusion, Honorable Speaker, this report underscores the need for improved financial management practices within the ministry. Addressing identified issues will require concerted efforts from both the ministry and the treasury to ensure that public funds are utilized efficiently and effectively in the development and maintenance of the country's transportation infrastructure. I thank you.